Welcome, everybody, to Crossing the Line, where we dig into the latest news on the economy, housing, and frankly, anything else that interests me or aggravates me. More about that in a minute. I'm Greg Heym, chief economist at Brown Harris Stevens and author of The Line, a weekly economics blog with over 2,500 subscribers. Our goal here is always to be informative, concise, entertaining, and edgy all at the same time. Sounds tough, but let's see if we can pull it off. It's was a slow week for economics data last week. No major releases, but we do have a lot of good stuff to go over. And just to tease, next week we'll have 2 inflation reports and data on retail sales. But before we get into it, I got to say I wish Ray I was in a better mood today, but unfortunately I stayed up to watch the Jets game last night, and I don't know why it upsets me so much. You know, Hannah, I've been watching Jet games for 40 years, and it just always seems to end the same way. I've never seen such incompetence in a team before in my life. They've gone 11 quarters without scoring an offensive touchdown. I don't even know how that's possible. But
they have to do better for you.
They're not trying. You know what it is? They made a bet on an old quarterback who brought in a lot of his players, and then he got hurt 4 plays into the year, and now who knows what's happening. But, you know, we'll keep ranting about it. But I'm all in on the Rangers. That's what I'm all in on. You know, they're in first place, so we're going to go with that. So we have Hannah running co-pilot again. In case I fall asleep, she'll take over. And we have Ray and Lena helping us out here. Are we excited to be back doing this again?
I mean, why wouldn't I be?
That's a good answer. Excellent answer. And we have Ron Guidry here in case I need inspiration. And speaking of that, we've changed one of the pictures behind me now, the Miracle on Ice 80 Olympic team. Arguably the greatest sports moment of my lifetime. And, of course, Alfred E. Newman, just to keep me humble. So we're going to start just a little bit on Veterans Day. I know that a lot is been written about it and talked about it. And, you know, we all appreciate everything veterans do for us. And to be honest, I don't have a right to be offended because I'm not a veteran, but it bothers me that it's not treated like your typical holidays. It's optional. A lot of companies, some companies don't observe it. I think that's terrible and should be changed. But we have a little bit of interesting data to go over. Before we get into that, you have a veteran you want to speak about.
I do. My great-grandfather, Jack Kaufman, was a paratrooper, and he was in the first group of guys on D-Day that went into Normandy on a parachute.
I don't know how just watching the movies you watch Saving Private Ryan and some of these other movies, and I don't know how those guys did it.
And in Band of Brothers, when they're all on the plane, it's just dead quiet. Like I can't even fathom the fear,
Did you inherit that courage?
Absolutely.
Well, that's good. That's good. Well, my dad was an Air Force vet, and was stationed in Greenland a lot of the time. So I always wondered what he did to get sent there. But he was very proud of his service. And my brother Chris was a Marine during the first Gulf War. So happy Veterans Day. I already said this to him. And to all you veterans out there, you deserve our respect and any help we can give you. Ray, you have somebody, your dad?
My father was in the Korean War, got a Purple Heart. So thanks.
Oh, wow.
Dad.
Well, that is amazing. And, you know, we could talk about these stories all day long. These people are amazing. But unfortunately, you know, we're starting to see a decline, obviously. So here's some statistics courtesy of the Census Bureau, and this is from last year, the latest data we have. There are 16.2 million veterans in the U.S., which is a little over 6% of the population 18 and over. Female veterans are a little over 10% of that number. So they're accounting for a larger share every year. If we look at it by war, the percent of veterans that served in World War II is just under 1%. Obviously, those people are in their late 90s. God bless them all for what they did. Korean War makes up about 4%. Vietnam, 34%. First Gulf War, a little over 24%. And the Second Gulf War, 26%. 26.5% of veterans are 75 and older. And 8.5% are under 35. So leave it to the economists to throw some data about the
thank you to our veterans.
Yes, thank you to the men and women out there that protect us every day. We do appreciate it. So let's talk about our first topic of the day, the economics topic, which is basically mortgage rates We had a good week for mortgage rates, and we kind of predicted this because we knew that because of the bad jobs report or disappointing jobs report, whatever you want to say, that we were going to see a decline in mortgage rates because that's all about the future for inflation. So we saw basically a quarter-point drop, the largest decline in mortgage rates in almost a year. And, it's also 2 straight weeks of declines. So things seem to be moving in the right direction for now. As I said earlier, we're going to get a couple of inflation reports this week and a report on retail sales. So that's going to be a little bit telling to us in terms of if we need to change that outlook, if people are going to be more optimistic or pessimistic. Hopefully, again, inflation keeps moving in the right direction. The concern has always been, can the Fed get this soft landing on inflation, which basically means let's get inflation down under control without causing a recession. Sometimes they've had to actually cause the recession because it was the only way to break the back of inflation. It seems odd, right, Hannah, that we're rooting for a slowdown in the economy. Like, that'd be like me telling the Jets not to score. But I don't have to do that because they can't score. But, it almost seems like we're, as real estate industry workers, we kind of want that slowdown because it's killing us that long-term rates are still this high. And then when you add in the fact that prices aren't coming down in most parts of the country, and it's that double whammy for home buyers out there. But we worry about the Fed. They were a little late to the party, but now things have started to get a little better. And the question is, has the Fed, done enough? And are they really responsible for the dramatic decline in inflation? If you remember, inflation was running last June 9% year over year, roughly. Now it's a little over a third of that. So a lot of progress has been made. The question is, was that inevitable to happen? Did the Fed, even though they were late to the party, did they make up for it? So there's 3 ways inflation can come down, or the 3 ways you can attack it, so to speak. One is what they have done, which is hike rates a bunch of times. But you remember, Hannah, what we say about inflation: too much money chasing too few goods. That doesn't do much necessarily to contract the money supply. Just raising rates by itself doesn't get it done, especially since the rate that the Fed adjusts, the federal funds rate, isn't really used anymore. That's a whole nother podcast for a day when we have a lot more energy because it's all about banking and a lot more time. I mean, basically, banks don't trade federal funds anymore. It's a post-Lehman Brothers thing. So that's one way you can bring inflation down. You can hike the rates and slow the economy, and that should do the trick after a while. A second way would be to bring down the money supply. Now, the money supply was raised 40% after COVID. That's unprecedented. And, that how are you going to get the money supply down? Basically, you have to take money out of people's pockets. And, they're already getting a lot in taxes. How much more do they want from us? But since it peaked last year, the money supply is actually down 6%. So that tells you part of the story. But then there's the third explanation, and this goes to an article that James McIntosh wrote in the Wall Street Journal this week, which was entitled, "Why the Fed Shouldn't Get Credit for the Fall of Inflation." And the third thing is, too much money chasing too few goods. If the goods aren't too few, if there are enough to go around, that will also help with inflation. Not to sound like an economics professor, but there's 2 ways you get inflation.
You sound like an economics professor?
It's funny. Sometimes people call me Dr. Heym, and I always say that's my brother. It's not me. He's the doctor in the family. Although I think I'm a better scientist. And they call economics the dismal science, but
yes, they do.
Does?
It's people that aren't
Right.
economists, right? That's the problem. I mean, come on, who would say that to my face? Probably a lot of people. But I always tell him, I say I don't know a lot less than he does. He does wonderful work. He's a pediatric oncologist, and he does a great job with the kids. Yes, you can clap for him. He can hear us in Texas, hopefully. It's an hour early. Yeah, no, but we always joke that it's weird to have a little brother that, treats kids. Like, that's my little brother. What's he doing?
What's his name?
His name is Dr. Ken, as we call him. My brother Ken, yeah. So shout out to him. So the supply. So basically, if it's a demand problem, too much money. So that's what you call demand pull inflation. Everybody gets money, which is what happened in the pandemic. We go out spending it. That drives the price up. Then there's what we call cost push inflation. That means supply goes down. It's harder to get stuff, so the price goes up. We had both of that, therefore bad inflation. So this article basically is crediting the improved supply chains. You know, it's a term we never used before this, but now I always use the example of a PlayStation 5. You couldn't get a PlayStation 5 for like a year and a half unless you won a lottery. Now you can actually go to a store or go on Amazon and buy it. You have one?
Of course not.
Oh,
No,
wow.
I didn't want to get into a fight to get one.
Well, that's okay.
Yeah,
Now you can. Now
a lot
you
of
can.
pressure.
Well, it was a fight. It's pretty pathetic, I guess, me being 53 to fight with my son over the PS5 since he's 16. I should just let him use it. I've actually given up gaming due to a thumb issue. So.
Oh.
Well,
I'm so sorry to hear that, Greg.
I don't know.
I hope your thumbs are doing well.
It was either guitar or video games, and so I stay with guitar. But anyway, so the reason this author really says it has to be the supply chain issues being corrected is he actually, we all remember American Bandstand. In the old days used to have a record, and they would rate it in different categories. So he looks at the effect the rate hikes had on certain aspects of the economy, and then rates from 0 to 5, if the Fed's hikes slowed that down. And he talks about things like savings and borrowing, consumption. Consumption is interesting because consumption is 2/3 of GDP, personal consumption, what Hannah buys every week, which we have investigators trying to find out.
I'm very responsible with my money.
Why? No, I'm just kidding. I think we all should. We talked about money education, so yes, we should continue to preach that. But it's done nothing to really lower consumption. You know, we saw a great GDP number last quarter because personal consumption remains very high. The only area, and this is where we get upset, that rate hikes have really slowed down things is housing. We know what's happened to mortgage rates, but at the same time, we've seen construction go down. Obviously, they have to borrow money. And I think that's, that hurts us. And, we talked last week that a bunch of real estate groups wrote a letter to Jerome Powell asking him to please stop. We don't want no more, sir. Please don't give us any rate hikes. So with that, looking at all the categories here, and it's true, housing is the only area that has shown a marked slowdown. So, look, I like to point out the Fed is kind of messed up things here, and that they were late to the party and they need to step up, and they've done that until recently. We talked about how 3 out of the last 4 meetings they haven't done anything to rates. So what does Jerome Powell say this week? Quote, well, he's, quote, not confident that they've done enough to bring inflation down. Right. So why are we getting no changes to rates each meeting? 3 out of 4 meetings, they haven't done anything. What are they waiting for? See, this is leading into, our first part of the rant of the week. It just boggles the mind. And I don't know if you saw, he yelled at a heckler this week. He actually
No, I didn't.
He was talking about saying that boring economic stuff about consumption remaining strong and blah, blah, blah. And then someone started yelling at him about climate change. So he left the stage and got caught on a hot mic using foul language. Shame on you, Jerome Powell. Wow. Shame on you. Actually, I could understand you get mad. Someone starts yelling at you. It just goes to show you, again, the Fed should be worried about prices. So that's, where we're at. Rates are 2 weeks is hardly a big trend, but we'll know, and we always say this a lot, we'll know this more this week when we have consumer price index, producer price index, and retail sales coming out. One of the things that we notice is that consumers have kept spending because they've been hitting the credit cards really hard. And, the excess savings during the pandemic has run out. I don't have any excess savings left.
No, I certainly do not.
Well, I thought you weren't spending anything.
It doesn't matter.
Okay, well, just watch those credit cards because they'll get you every time.
I only have one, okay?
That's okay. It's funny, you hear all this advice, like you need more than one credit card. I remember buying a car and the guy was yelling at me because he was going to give me a higher rate on the loan because I didn't have enough debt. I was like, what? I need more debt. See, again, that education would come in handy. So, consumers are still spending, but apparently that's not making them happy, is it?
It's not.
Yeah, we got a couple of articles this week and surveys about how people just aren't happy. Why do you think that is, Hannah?
I think there's a ton of different reasons. I mean, the Fed doesn't make you happy.
No,
so,
it does not.
I mean, if you combine the economy, inflation, the current state of the union.
Yes.
These are the Jets.
The Jets, that's true.
These are touchy subjects, but there are a lot of different factors as to why people are so unhappy.
Right. In the old days, from an economic standpoint, we used to have this thing called the misery index. We basically just added the unemployment rate to the inflation rate. It was above a certain place, people would be miserable. The funny thing is, even as high as inflation got, unemployment never got high. And let's talk about the economy for a minute. Things are much better than anybody thought they would be. We have an unemployment rate under 4%. We're still adding jobs at a really good clip. There's still over 9.5 million available jobs out there. Claims for unemployment are low. You would think people would be, pretty happy and optimistic. But when they're asked, and consumer sentiment just fell for the fourth straight month, it's still the ongoing toll inflation is taken, right? Nobody's happy about what anything costs.
Right.
And particularly, those people when they go to the grocery store or the gas pump, that's where that drives consumer moods as much as anything. And I think, obviously, the credit card debt they have, it's over, $1 trillion. The average balance per person is up to $6,000.
Is it really?
Yeah. And the average rate now is at a record. It's a little over 20% on credit cards. So I can understand why people would be very unhappy just based on those things. And you mentioned, you add in the political landscape. I mean, this country has always had political divides. We had a hard time founding this country. What would have been funny is if, John Adams and Thomas Jefferson had Twitter. Like, how ugly would that have gotten?
Pretty ugly, to answer that.
I mean, these guys talked a lot of smack about each other. They didn't really get along. It would have been funny to see what could have happened there. I fight with my son about this, about how, I went through a lot of the same challenges he did. No, you didn't have social media. And I said, it's just they're different tools, but I don't know that people change. But obviously it doesn't help, too, that we have these two wars going on now, right. and nobody's ever happy and should be ever happy when there's a war going on. We should avoid war at all costs. But I do think, a lot of it is based on political beliefs, too. If you look at these surveys, obviously, it's easy for the people who aren't in power to say, well, it's their fault, or, and vice versa. And then people will take credit for things. People, you shouldn't take credit for that. I think, unfortunately, that's always been the case. Right. I guess I saw somebody sent me a Twitter video the other day of a woman who said, I don't want to work anymore. And at first you thought, this is just one of those, sorry, Ray, you have to work. Hannah, you still have to work. Lynn, you still have to. I'm the one who's ready to retire. So she said, just so you know, I'm not lazy. I'm not one of those people. And she went on to make a pretty good argument as to why her generation, is feeling what's the point? Because they look at how much money it takes to buy a home. They look at, the cost of everything, and they wonder. My grandmother used to tell me my whole childhood how every generation was actually going to do worse, because
it's discouraging for sure.
But in fairness, everybody hears that. I mean, the American dream is that every generation should do better. And I think, parents typically strive to do that. And then they reap the benefits when one of their kids takes them in and,
right.
Gives them a nice life. We do wonder what's going to happen, I think, too. And I want my son and I want all the kids out there to have opportunity and not to get discouraged. But these are hard problems to solve. And honestly, I think we're not focusing on them so closely. We're too busy arguing with each other and not. I think the biggest thing that I noticed in my lifetime is the lack of compromise. It seems that we used to have speakers of the House compromise with presidents and get deals done. It's just now that anybody can have a voice and disrupt things. And, that's just the way it is. We all have to live in that world. So, I'm not saying the future's so bright we have to wear shades. Ray remembers that song, I'm sure. Timbuk 3? Timbuk 2? I don't remember who did.
By who?
That was the song.
I've heard the
It was an 80s song, but yeah, anyhow. But, you know, we've also shown an incredible resiliency in this country. We talked about the veterans. I mean, think about the aftermath of Pearl Harbor and going through multiple world wars, a civil war here. We always talk about how New York City always lands on its feet. Let's give the United States some credit, and I think we can do better, and we will do better. That's my miracle on ice moment.
That was so optimistic.
I know. I should have wrote it down. But anyway, we'll watch the tape back. So anyway, speaking of optimistic, the Mets owner has something going on. Steve Cohen, who bought the Mets a little over a year ago, wants to build what he's calling Metropolitan Park around Citi Field. And this is interesting because one of the complaints, and this goes to another rant that I have, is I'm a big sports fan. I go to a lot of games.
Yes, you are.
And a lot of the arenas and stadiums in this area, talking about New York and New Jersey, don't offer a full enough experience to fans. Like if you go to Baltimore, I used to take my son to Camden Yards. There's restaurants there. There's hotels right there. You got the water there. There's an aquarium right there. I was in St. Petersburg over the summer. We went to a Rays game, stayed in a hotel across the street from the field. Nobody goes to that stadium. I don't know why. Small market team, I guess. And then after the game, within walking distance, restaurants and bars, around. And I think, so part of me is all for expanding and putting restaurants and other things there. And hotels and something, they're going to have a tailgate area, although it's not very close to the stadium, so I'm not sure how that would work. But there is one thing in here I don't like, Hannah.
What is that?
Casino. I don't know why we're in such a rush to build so many casinos and make gambling so accessible to everybody. I honestly do not like this. Sporting leagues suspend people, and in Pete Rose's case, kick them out and don't let them in the Hall of Fame for gambling. Yet you see now people wearing gambling patches on their uniforms. I can't watch a Ranger game without every commercial reminding me I can still place a bet. And I was supposed to tell my 16-year-old son that, no, gambling is wrong when there is a commercial for literally every 5 minutes on whatever sporting event you're watching. I know it's an $8 billion plan that Steve Cohen has. I know it will create a lot of jobs. Look, Charles Wang tried this when he owned the Islanders years ago. He tried to do that in the Coliseum area, and the town didn't go for it.
I mean, casinos always feel like a hit or miss situation. Like you look at Atlantic City.
Yeah.
As a fellow New Jersey commuter here, it's not the greatest place, and I think that it's kind of hit or miss in this situation too. Well,
I think, when you rely on any area that relies solely on one industry, and we've seen that here in New York. You look at upstate where basically the entire city of Rochester used to be employed by Kodak, and Johnson & Johnson used to, and GE,
Camden with Campbell's Soup.
Yeah, when you're tied, or Detroit, obviously, with making automobiles. The great thing about New York City is the diversity of the economy, and that's great. So you don't live and die by one industry. Wall Street's still very important, but tech has taken up a lot of that space, so we don't have to fret it as much. But I like big ideas. I like big plans, and I do like to gamble. I'm not saying I don't like to do it. But I do think that throwing casinos on every economic development, and I mentioned Charles Wang and the Islanders, now there is a plan to put a casino by the Nassau Coliseum now. And
is it really?
Yeah. So, look, we have Jake's 58, which is basically all terminals. But I just don't like it.
I'll stick to the scratch-offs from the gas.
Well, yeah, you can lose your money.
I would love to win $10. That's.
But then what do you do with the $10? You're going to buy 10 more tickets.
You get
no,
gas
you're going to buy $10 more tickets.
No, I won't. I swear.
You ever been in a convenience store and someone's like, "Oh, I want $5. I'll take 2 of those and 1 of those," and you're like, "You're going to keep doing this till your money's gone. Like, what's the deal?"
Don't make generalizations.
Well, I like the idea of making the areas, like we joked about American Dream. We were talking about this earlier in Jersey. Yeah. The Meadowlands is in a swamp, and okay, it's great. And this goes back to when that was Xanadu, which never really got finished and just sat there as an eyesore for years. But I mean, imagine that sell. Hey, we got this great sports, we got this great mall here. We got a water park, we got a ski slope, but don't come and try to shop on a Sunday during the Christmas season because there's a football game going on every week. You're not gonna be able to park.
Right. I've been to this mall, and it is a monstrosity, to say the very least.
Well, I mean, it's funny that they keep building bigger malls because they figure the mall by me closed last year. It sold for 20% of what the people bought it for 15 years before that. The days of, I used to take my son to that mall. I used to buy him a toy. Now, it's unless you've got an Apple store or a Dave & Buster's or something like that, it's very hard. All right, we're getting close to the end, so we're going to run off some quick topics. What's next?
Let's talk about why employers are a little upset right now.
Yeah, they're getting hit hard from two things, just like home buyers. One is surprising. Workers aren't quitting.
Never thought that'd be an issue.
We're here. We haven't quit, right? And the quit rate is measured by the Bureau of Labor Statistics. Workers were quitting a lot up until recently because there were plentiful jobs and they were chasing better pay and probably working from home most of the time, to be honest. And the reason that's tough is that you, as a company, you rely on turnover to a certain degree, and you rely on attrition. This way you don't have to lay people off. You just don't fill the jobs. The longer people stay in jobs, the more you have to pay them. So I think that's why they're upset about that. And the other thing is pay transparency. A lot of states now, like this state, require, New York City does at least, I don't think New York State does, require you to post a salary or a salary range when you list a job, which is good for the job hunter. Of course, none of us are looking for jobs right now. We're all incredibly happy. But what's the funny thing about these ranges, though, Hannah?
They are pretty vague. I've seen job postings where there's like a $70,000 difference. I mean, you never really know.
It basically says
what you're signing up for here.
The range is like $50,000 to infinity. No,
yeah.
To infinity. They actually put the infinity.
Yeah.
No, it's crazy, and I think the problem is that now companies are looking. So it's not like with sports, everybody knows what everybody makes.
Right.
You can go look that up in 2 seconds. But in this case, they're trying to do that so the competitors don't really know what they're paying people. But it has led to a sort of an arms race to post better salaries and to post better benefits to get those people to look at it. It used to be, you didn't talk about that in the beginning. Now it's like the first thing that's talked about is the money. And again, it's helpful for people looking for a job to know where they're at, but it will exclude potential, hires just by looking and go, no, I don't like that range. So I can understand that, but and with the desperate need a lot of these companies have for workers, they don't need any obstacles in their way. What's next?
Ooh, okay. The Retail Task Force proposed by Jerome Powell.
Yeah, I was going to say
I like this one.
Well, you know what? You wait a long time to address a situation where there's an article over the last 4 years, shoplifting has risen more in New York than any other city. And I could make a joke like, what was Jerome Powell watching this or something? Like, why are we so late to the party here? I saw a thing this morning on the news that CVS's are now putting pictures of items instead of the actual items on shelves.
I've seen that too.
And we're talking about toilet paper here. We're not talking about we're laughing because we'd cry if we didn't laugh, but I do think it's
What's
it's about
common
time.
is a lot of cosmetic stores like Ulta, Sephora. There's a major issue with high-priced items like perfume and things like that. There were so many videos over the past couple of years of people just running in and.
Well, and you have smash and grabs,
right.
and it's very tough too. And look, the city did so well improving its image in the 90s, and it's the decades following.
Policy.
Well, it also they for years we were able to say we're the safest big city in the world, and. Yeah. This is a problem that plagues all major cities in the U.S., it seems now, and that's a shame. But you know, you add the migrant, you know, crisis going on, and the mayor's got his hands full. All right, a couple of really quick hits before we go. Ray's pointing at the clock, which says 0, but we can go over. They don't have to pay us overtime. What do we got?
I mean, we could talk about the restaurants issue that you're having with the Michelin star rated.
Well, you know, the Michelin star announcements came out, and
you have a lot to say about this topic.
I don't have a lot to say. I've actually been to one of the restaurants. Of course, I didn't pay, but it was spectacular. I guess. Do you get excited about this? Do you eat it?
Sometimes, yes. I mean,
do $300, you know, 5-course meals? Is that how you roll?
That's one of those things that the excitement really wears off when the check comes, but it's really there when you're sitting and eating. So it's hard to say.
All right, it's great for the city to have more restaurants put on there. That's great. Hopefully, it'll continue to attract more people to come here. It's just, you know, it's like if I complain about my salary, do I expect the people that work for me to care? No, like it's you know, so. I guess you can't expect me to. I like to go to a nice steakhouse like anybody else, and yeah, I sweat the bill when it comes to, especially Luger's where you still have to pay cash. You know, I never know how much to bring.
Is it really like that still?
I think you use debit cards there, but it's just something about paying cash, and then they give you an old receipt like thing, and you kind of look at it. All right, so anybody can chime in on this if they want. Nobody's forced to answer because this came up. Which stock in the S&P 500 has the highest rate of return over the past 20 years? Does anybody want to guess?
Apple.
Apple is number 2.
Oh, that was my guess. Amazon, Lena said?
No, it is not a tech stock. Anyway, I don't expect anybody to get this. Monster Beverage, the company that makes, you know what it is? I guess people just love the drinks. I don't know. I mean, it used to just be coffee and soda, you know, but you see, you know, energy drinks all the time now.
You'd think Red Bull would be more popular than Monster.
Well, it's not about popularity. It's about how well the company is run. When you think about it, and the growth over the last 20 years. I mean, this even sounds like it's made up. Over the last 20 years, Monster Beverage has returned a little under 83,000%. That's an average annualized return of 39% per year. Apple's second with 37%. And see, Ray, you learn something every week.
You asked us, but you knew we wouldn't guess.
I wouldn't have got it right, but see, that's the advantage of it being my show. I get to ask the questions, so I look smart. It's, you know, it's like Alex Trebek. I always thought he was always making people feel a little silly. It's like, you didn't know that was, you know, whatever, and it's like everybody knew that.
It's just a casual roast.
Yeah, I suppose, but
he is sorely missed on Jeopardy. Yeah,
no, I used to play that with my brothers when we were kids, and my little brother, the doctor, used to win all the time. That's okay. I'm smarter in other ways. I'm smart. My mother told me I was smart. One more thing. There was an article about the money. You know, we're not upgrading our money. We joked about cash last week. Sorry that I said that you don't know what it looks like, Hannah. That was just...
You're forgiven.
The proximity just does it, you know, I think a little bit. But, so anyway, that's... do we have to upgrade our money? Does it have to look cooler? I don't know. But they did mention, and I know you know the answer to this because we talked about this. What is the most popular denomination of our currency? Which one is used the most? Anybody want to guess?
20s.
See, 20s is a good guess because that's what you get out of ATMs. It used to be singles. Now it's $100 bills. Wow. It's all about the Benjamins, I guess.
It's most popular with me as well.
Well, of course. But try to use one in a store and they get a microscope out and look at it.
Yeah, it's a whole thing.
You know, I remember when I was a teller in the 80s in a credit union, people would ask for $500 bills, but they had been taken out of circulation in the early 80s because people just weren't using them enough. So on a closing note this week, I just want to, on a personal note, Wednesday marks 2 years since my dad passed. So I want to say 2 things. One, you know, I was lucky to have such a great dad, and I was lucky to have him for the first 51 years of my life. And most people don't get that, either of those things, let alone both. And I was fortunate enough. And I would say my dad died of Alzheimer's. If you're a caretaker of somebody with Alzheimer's, you have my prayers. It's incredibly hard. If you know somebody who's taking care of a parent that has this, support them any way you can. It's a terrible disease, and hopefully we keep hearing of progress. But, you know, in the meantime, those people need your love and support any way you can do it. Sorry to end on such a tearful note, but I get that way talking about my dad.
Dads
He was
are the
great.
best.
He
I hope
was.
that I have my dad for that long.
I hope you do too, and I hope everybody has that, you know, that relationship. If they don't, I feel very sorry. I had the book written on how to be a father and a husband and an employee and a man, because my father did it every day, and a man who never thought about himself was a great role model. So I want to end on that note.
That's a good note to end on.
Thank you, Hannah, and thank you for being co-pilot again, and thanks, Lena, and thanks, Ray. Sorry we went over. You can find me later. I'll pay you with the hundreds in my wallet because, you know, that's popular. So, and I want to thank the audience again. We had very good viewership, and look for those links to come out soon. And have a great week, everybody, and we look forward to doing this again. Have a great day.